Hi viewers, we are going to study conceptual framework today. This course is about ACCA financial reporting. You can watch the videos whatever I publish for this course. I am going to do this course with the help of BPP Workbook 2023. So I am going to read this and explain to you so you can follow it up and study. Now we will go into the conceptual framework. What is a conceptual framework? A conceptual framework for financial reporting is a statement of generally accepted theoretical principles which form the frame of reference for financial reporting. Its theoretical principles provide the basis for the development of accounting standards and the understanding and interpretation of accounting standards. Therefore, a conceptual framework will form the theoretical basis for determining which events should be accounted for, how they should be measured, and how they should be communicated to the users of financial statement. So, conceptual framework, from this explanation we can see that it's a theoretical principle and it's a guideline for you to prepare the financial statement. We studied how to prepare the financial statement, the basic financial statements from our earlier studies using the accounting concepts. But further up, for financial reporting, conceptual framework is designed to give you guidelines to establish the facts, disclose the facts, and present the facts, measure the facts of the financial statements. The financial statement consists of the accounting elements, that financial elements. The elements of financial accounting is called assets, liabilities, expenses, income, and equity. So how these things have been brought into the financial statements? You know what are the financial statements? Basically, we have the profit and loss statement, balance sheet, and cash flow statements, in addition to the notes. So all these things should be presented well to give the users a true and fair view. That is called the faithful representation. So, the conceptual framework gives a guideline how to prepare the financial statement faithfully. For that, it brings in the accounting standards. Accounting standards unify. Actually, it will be used in all the accounts and all the entities' accounts for the transactions. Then, the standards transactions can be disclosed. So, accounting standards explain how a transaction can be accounted and disclosed, measured, and presented. Therefore, the conceptual framework gives guidelines how a financial statement should appear and how the standards should be produced, on which basis, what are the characteristics of the financial statements. All these things are explained in the conceptual framework. We are going to see the conceptual framework chapters separately in detail to the extent that it is needed for the financial reporting exam of ACCA. So we know that the conceptual framework is a theoretical guideline. So we see what is the advantages of conceptual framework. I'll read out that. Accounting standards are developed on the same theoretical principle, which avoids a haphazard approach to setting standards and should lead to standardized accounting practices. So this will help you to give a standardized report and ensure consistency. The development of accounting standard is less subject to political pressure. No one can pressurize you. The directors or any other party, like shareholders, you can't satisfy one party. You have to be neutral. That's what the accounting conceptual framework helps to avoid the political pressure. Pressure on standard setters to adopt a certain approach which would only prevail if it was acceptable under the conceptual framework. Accounting standards use a consistent approach. Example, without a conceptual framework, some standards may concentrate on profit or loss, whereas some may concentrate on valuation of net assets. So there can be two different approaches taken whenever there is a need arise without a conceptual framework. The standard setters will do it as and when it comes, and whatever the approach that is comfortable and convenient for the party whom they are going to satisfy. All these things can be avoided by having a conceptual framework. A principle-based approach avoids the need for large volumes of rules to address every scenario. Instead, the same underlying principle can be applied to any scenario. That means conceptual framework is a conceptual framework is a principle-based approach. It's not a rule-based. Rule-based means for every scenario, you have to find out the rules. You have to instruct, do this, though that is not necessary if there is a principle-based approach is followed. So the conceptual framework for financial reporting published in 2018 follows a principle-based approach. Principle-based approach is difficult to circumvent. You can't just escape it. So these are the advantages of conceptual framework. Then we go on to see disadvantages of a conceptual framework. When there are advantages, there are disadvantages also. What are the disadvantages? Financial statements are intended for a variety of users, and it is not certain that a single conceptual framework can be devised which will suit all users. That means with one conceptual framework, you can't satisfy all the stakeholders, all the shareholders, all the users, whatever the need they have through the financial statements. It's difficult. Given the diversity of user requirements, there may be a need for a variety of accounting standards, each produced for a different purpose and with different concepts as a basis. So there can be wider user requirement. The need for financial statement for each user is different. So the conceptual framework, through the conceptual framework, we are preparing the financial statement. It is restricted for a variety of purpose. That is a disadvantage of a conceptual framework. It is not clear that the conceptual framework makes the task of preparing and then implementing standards any easier than without a framework. So if you compare it with the framework and without the framework makes task easier is not evident. Whether conceptual framework is making things easier, we don't know. The implementing standards maybe without framework can be easier, but it can be done on a haphazard way which is not accepted by the preparers of the financial statement. The preparers are guided by the conceptual framework. So that is the conceptual framework, advantages and disadvantages. So we see IASB's conceptual framework. What is IASB? International Accounting Standard Board. The purpose. IFRS standards are based on the conceptual framework for financial reporting. The conceptual framework which addresses the concepts underlying the information presented in general purpose financial statement. So it's going to say what is going to get involved or presented in the financial statements. The purpose of conceptual framework is to assist the IASB. IASB is the board who prepares the IFRS standards. So the conceptual framework is going to assist the IASB to develop IFRS standards that are based on consistent concept. Consistency means following the same principle over a period of time. Assist preparers of accounts to develop accounting policies in cases where there is no IFRS standard applicable to a particular transaction. That means for a particular transaction, if you can't find an IFRS standard which is saying how to account for the transaction, then with the help of conceptual framework, management can develop accounting policies to account for the particular transaction. Or where there is a choice of accounting policy exists, then if there are choice of accounting policy exists, what accounting policy has to be selected can be decided with the help of conceptual framework and assist all parties to understand and interpret IFRS standards. So it assists all parties. That's the purpose why the conceptual framework is formed. It's going to help the standard setters and the accounts preparers. The status. The conceptual framework is not an IFRS standard. It itself on its own, it's not an IFRS standard. It's a guideline. It does not override any IFRS standard. That means if there is a conflict or a contradiction between the IFRS standard and the conceptual framework, the IFRS standard will prevail. Because when you are preparing the IFRS standard, all these facts has been considered and IFRS has been finally issued. So IFRS will survive. IFRS will prevail for you over the conceptual framework if there is any contradiction or inconsistencies arise. But the conceptual framework is not an IFRS standard. It does not override any IFRS standard, but instead forms the conceptual framework for development and application of IFRS standard. So conceptual framework is going to help how an IFRS standard can be developed and applied. So what are the contents of conceptual framework? The conceptual framework is divided into 8 chapters. You do not need to know all of the content of the conceptual framework for the financial reporting exam of ACCA. In the rest of this chapter, we will cover the key parts of the conceptual framework that are included in the financial reporting syllabus. So whatever the syllabus application will be included in this workbook. The objective of general purpose financial reporting. The objective of general purpose financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions. If you observe, the conceptual framework defines the users only, or they restrict the users for useful. They say existing and potential investors, lenders, and other creditors. These people are the primary users because they have given importance for these people. These people are providing resources to the organization. So they have a say strongly than the other stakeholders like shareholders, customers, and other government. So the priority is given to existing and potential investors, lenders, and other creditors. So these are the people who are having the priority over the other stakeholders. Existing and potential investors, lenders, and other creditors are referred to as the primary users of financial statement. So they are the primary users because they are providing the sources of funds to the organization, to the entity. Primary users may make decision about buying, selling or holding shares or debt instruments or providing or settling loans. So they are giving loans or they are investing in shares or debentures. To make decisions, primary users need information about the economic resources of the entity, claims against the entity, that means the assets and liabilities of the entity. They are interested to know the entity and changes in those resources and claims. The changes in assets and liability occurs through the performance, that is the profit or loss. So they are interested in two statements, that is the balance sheet and the profit and loss statement. Management of stewardship. How efficiently and effectively the entity's management and governing board have discharged their responsibilities to use the entity's economic resources. So why the primary users are going through the financial statement? To know how the management has managed the resources. They have provided the resources, how the management has effectively and efficiently used the resources to produce more income. So they want to know. So these financial statements are interesting for these these primary users, for them to make decisions about providing resources. So these financial statements are prepared using two basic concepts. One is accrual accounting, other one is going concern. These are two assumptions, or these are two concepts based on which the conceptual framework advises the financial statements to be prepared. The conceptual framework requires financial statement to be prepared using accrual accounting. That is, effects of transactions and events are reported in periods in which these effects occur, even if the resulting cash receipts and payments occur in a different period. So the transactions, the effects of the transaction can occur during the period of financial accounting, but the cash receipts can be different. Cash receipts can be the other period, or it may have received in advance, or it may have been in accrual and paid in the next year. But the period, within the period, the effects of the transaction has to be accommodated. That is the accrual basis. This is also referred to as the matching concept. The matching concept also says the expenses and income for a period has to be matched. So there is an underlying assumption. Second one is the going concern. This is an assumption on which the conceptual framework insists for the preparation of the financial statement. Going concern means the financial statements are normally prepared on the assumption that the entity is a going concern and will continue in operation for the foreseeable future. So it will continue its operation. It's not going to liquidate. It's not going to wind down. It's not going to close down. This means that it is assumed that the entity has neither the intention nor the need to liquidate or curtail materially the scale of its operation. However, if such an intention or need exists, the financial statement may have to be prepared on a different basis, such as a breakup basis. So if there is an intention that the company is going to get liquidated or closed or stop the operations, then you change the basis of preparing the financial statement. There is no continuity, so we prepare it. It's called a basis of breakup basis. Breakup basis means that you get all the net realizable value of the assets and liability and give the final figure for the shareholders. This will be the realizing figure of the entity when we close down. That is the breakup basis. So this video, I have explained the conceptual framework. Now we will get into the qualitative characteristic of useful financial statements in our next video. If you are satisfied with this video, please subscribe for it so you can watch continuously my next videos. So until we meet in the next video, goodbye.